Hi, I'm Brenda Schleiss. I'm an estate planning attorney at Angermeyer & Rogers, a law firm in Milwaukee, Wisconsin. As estate planning attorneys, it's our job to utilize laws to help our clients avoid as many taxes as possible. Taxes we're concerned with include the estate tax, the generation skipping transfer tax, and capital gains tax. In this video, I'm going to be speaking about that last tax, the capital gains tax. In a nutshell, a capital gain occurs when you sell an asset for a price higher than what you purchased it for. The price that you purchased it for is called your basis. So if I purchase a house for $500,000 in the year 2000 and I sell that house for $700,000 in the year 2020, my basis was $500,000 and I'm taxed on a capital gain of $200,000. My capital gain is the difference between my basis, what I purchased it for, and what the price that I sold it for. I'm taxed at a capital gains rate tax for capital gains investments. One can also incur a capital loss if you sell an investment at less than the price that you paid for it. But although that may offset other capital gains, it's not a tax issue we're concerned with. A step-up in basis occurs when you receive an asset from somebody who's passed away. The assets the decedent owned get a new basis, which is the asset's value on the date the person passed away. So if I purchased a house for $500,000 in the year 2000 and the house is worth $700,000 when I die in December of 2020 and my son inherits that house, his new basis in the house is the $700,000 it was worth on the day that I died. So if he chooses to sell the house shortly after my death, he may incur no capital gains tax, or just a tax on the difference between the value of the house when I passed away and what he sold it for. So for him, this is a major cost savings and taxes owed. If the house passes to my husband under Wisconsin law, my husband receives what's called a double step-up in basis. If we own a house together, I'm considered to have an undivided 1/2 interest of ownership in the house, and my husband is considered to have an undivided 1/2 interest in the house. So my half of the house gets a step-up in basis to $350,000, and my husband's half also gets a step-up in basis to $350,000. So the stepped-up value of both of our halves together is $700,000. And if he sells the house shortly after I pass away, he would pay capital gains rate only on the difference between the $700,000 and whatever it is that he sells the house for. The effect of a step-up in basis when somebody passes away is to eliminate capital gains tax on any unrealized gain accrued by the decedent from the time they bought the asset to the time they pass away. Remember that a capital gain occurs when an asset's sale price is greater than the original purchase price. A long-term capital gains tax is incurred when you own the property for longer than a year. A short-term capital gains tax is imposed if you sell an asset that you've owned for less than a year. Short-term capital gains are taxed as ordinary income, but long-term capital gains are simplified to be either 15% or 20% based on your income. Now, President Biden's proposed policy was to eliminate step-up in basis for inherited assets. For example, this might end up taxing capital gains rate at the ordinary income level of 39.6% for people who earn over $1 million. This means that those people earning more than $1 million would pay capital gains rate at the exact same rate that they would pay for their income wages. There are different opinions over whether a country would be able to make that change in law take place, especially given the difficulty in tracing basis over generations. For example, how does the IRS value sweat equity put into a home by grandparents? If the property transfers to a grandchild, how will the IRS track the original and improved basis in order to tax the grandchild at the transfer? While we're keeping this issue on our radar, it's not yet a law, nor is it being presented in the Senate or the House. It's just a policy proposal. Hopefully we'll know more by the end of 2021. If you have questions on this topic or would like to discuss it further, please feel free to contact us at Angermeyer & Rogers for a complimentary initial consultation. We look forward to answering your questions.